Yes, sir. Welcome back to Unneutered. Just kidding. Welcome back. Was that funny or no? Okay. Unfiltered is the show covering hot topics across the industry. I'm sitting here. My name's Tim Rhey, and I'm with Rich Hanlin, and we are going to spend a few minutes on the biggest topics of the week. Now, obviously, we are moving into the end of the year, and before we do anything, Rich, we have to talk about the market and the Fed cut yesterday. Now, what did you see yesterday? What are your, we saw the Fed decided to cut rates 25 basis points. We talk about it all the time. That rate cut is for the overnight rate. It's not mortgage rates. We were very clear about that. However, that rate cut can impact mortgage rates. It's not a direct guarantee. What we saw yesterday was we had the rate cut announcement, which, by the way, was no surprise. We were expecting the rate cut all year, so it came in as expected, but that's when things got a little weird. Because as always, Jerome Powell took the podium and gave us his opinion on where the market is, where the economy is, and immediately the markets reacted. We saw I think the Dow Jones, dropped 1,000. I know the bond market took a big kick, lost about 60 basis points right away. I have my opinions on what happened there, but I'm curious to know what your thoughts are on yesterday's rate cut decision.
Well, again, this is unscripted, so you're just asking me what my opinion is. I'm no economist, but I pay attention to the words that he uses, and he talked about, hey, we're really happy with where unemployment's at. It's right where it was pre-pandemic or whatever, but it's soft. And I'm like, well, wait a minute. So which way are we going? You're cutting rates, but yet you're saying that we've got problems. And I think that's what the market heard too. Why even cut 25 basis points is what I thought. What are you doing anyways? I think people are disappointed with the guidance going forward. They talked about 2 rate cuts, 2025, 2 in 2026.
Is that what they said?
Yeah, I think they had some follow-up guidance on that. So, it was just disappointing all the way around, I think, for what people were hoping to hear. But at the same point, you have a lot of economists that are, we talked last week about the Titanic. It takes a lot to move the Titanic. But at the same point, I want to point out that we're not out of the woodworks yet by any means. This is just the beginning of the turn. We still have some hardship we got to go through. There's still some record highs in a lot of different areas that we don't want to have record highs in, let alone a stock market that's way over the top. You don't have to take my word for it. Hell, take Warren Buffett. He's pulling money into cash all day long. $325 billion worth? What does he know that we don't? Nobody cares about my opinion, to be honest with you, Tim, but you might want to pay attention to some of the smartest people that are considered in the business world and pay attention to what they're doing, because we got hedge fund managers that are hedging against, they believe rates are going higher, so they're betting against the rates going down. Well, what do they know? Hell, they're the 2 largest hedge fund managers in the world. D.R. Horton giving guidance that they got too many houses on the books. What do they know that we don't know? People say, Rich, bring us some good news. Cool. 2024 is almost over and 2025 is almost here. That's good news.
It felt like when Powell was speaking, the messages I heard was, like you said, the economy looks good. And he even said the policy that we are currently in looks good, which I guess he is basically saying, forget how much your debt has gone up. Forget about gas prices. Forget about what you're paying at the store. Forget about the job outlook. Forget about what you're seeing in your world. As far as the Fed is concerned, we kind of like where things are right now. And that is a huge, huge disconnect. I don't know how.
He said it specifically, Tim. Go ahead and say it. It's okay to say it. I believe he indicated the words that we diverted a recession. Didn't he say something along those lines?
Yeah.
And people are like, what are you smoking?
Yeah, it sounds like every time I hear this guy speak, I feel like he is sort of defending himself and justifying everything and spinning everything towards his job and what he has done. You got a sense of that last week when one of the reporters at the Fed meeting asked him a question. What do you think about Trump coming in and replacing you right away? Because apparently that was said. You notice if you watch it, he got a little offended. He said, we can't do that. It's against the law. And that's the first time you kind of saw him push back. So I'm under the impression that this guy and this whole administration, this whole group is really out to just prove, like you just said, hey, man, we soft landing, like we avoided a recession. Look at how good we're doing. The problem, though, of course, is we're not seeing it on our end. And if you look at if you read the papers and you start asking people what's going on, they will tell you flat out, I don't know what this guy's talking about. I'm not seeing the roses that this dude is seeing. So
I agree. Look, we're all in it together. It's kind of what we talked about last week. I feel like the information's manipulated. Believe us. This is whatever you think you're seeing, you're wrong. We're the smart ones. Someone said the truth. They said they don't control anything. The truth is interpretation, spinning it to what you want to have. But it's my understanding come January 20th, that manipulation is going to get thrown out, and we're going to hear a lot of interesting things that are the truth that the American people need to know so that we can make the best decisions for our families and finances and things like that.
2 more points. You brought up 2 rate cuts next year. And the problem, Rich, is that wasn't expected. So anytime we get news that is not expected, for example, jobs reports that come in, better than expected, that can hurt us. Well, when you talk about, hey, all of a sudden next year's not going to be that year of all these rate cuts, well, of course that's going to hurt us because, I just don't understand why he had to put that out there. I guess I'm not asking you to be dishonest, but that sentiment is going to hurt the markets. So I'm just curious. I just don't understand why that happened, but it is what it is, Rich.
Yeah, I'm pulling it up so you don't think I'm crazy. And it says, U.S. central bankers now project they'll make just 0.25% rate reduction by the end of 2025. So, that's what they said. How do they predict that, Tim? I mean, what makes them think that the total of 50 basis points is going to do anything? But I think you got to start looking at the other side of the coin where people said, we have not beat inflation yet.
Well,
inflation kills us.
That's right.
So therefore, slow down the rate cuts until we fix that problem.
Well, and further, what makes us think they're actually going to just do 2 rate cuts? Because, for the last 18 months, they've been telling us about these big rate cuts coming in 2025. And even 4 months ago, it was next year, 5 rate cuts are on the map. You look at the dot chart and all that, it's going to happen. And all of a sudden now, nope, looking like 2 or 3. So they changed their mind. What would make us think that they are just going to do 2? The bottom line is what they say and what they do really, really, really not usually the same thing.
Well, like always, I think you judge people by their actual actions, not by what they tell. Just like I don't judge my job reports based on the report of the day of. I wait till midnight the day of when a lot of revisions get made. I've never understood that, but I'm not the only one saying that. I'm just an average Joe. But yet, if you listen to economists, they're like, we've got to stop playing this game. Why do we play a game with the American people when we're the ones voting you in? You're there to give us guidance, but not to run our lives. And I think something has been lost there. We have too many things trying to run our lives now because they know what's best for us, health-wise, eating, financially. We just need to be quiet and get up and get on the freeway and get to work every day. Well, people aren't settling for that no more. What I heard with this, Tim, is we are at one of the biggest, we've had a lot of jobs lost, like $1 million job, but it's been replaced with people taking on gigs. Whether that's Uber drivers or people trying to get into YouTube. A lot of people have left a traditional workforce and they said, you know what, I'm done with that. I'm not making enough money anyway. So if I can replace that and do my own thing, I'm going to roll that. But now we have people getting into what we call the 2-gig lifestyle because one's not enough. I'm going to get another gig. But once you get that financial freedom and you can produce your own income and be your own boss, careful, you get a movement like you've never seen. But if you're going to hold wages down and people can find another way to cover those net wages and have happiness, that gets contagious. Really,
Rich,
does.
What does that do to the job numbers? I mean, does that now look like more jobs are created when you take a guy who's now working 2 jobs? I mean, some of these reports misread that as the economy growing because somebody left their salary position or went part-time more likely and then picked up another gig. So that skews the numbers.
Picked up. I don't think those gigs, that's somebody watching specifically in that industry, like people switching over to self-employment. I think the job data already has that in there where people are working a Walmart job at night on top of their normal job just to make ends meet. But I'm talking truly somebody that follows how many people have left that workforce, traditional workforce, and have said, you know what, I want to go on. I mean, we're in the industry. We got loan officers. I've been doing this for 34 years, Tim. I don't have the capability to put a shackle on my leg and punch in a clock and out of a clock. I'm worthless as that. It stagnates me. I'm just way past that point now that I could go back to that. So
you just answered my next question.
Okay, good. I'm clairvoyance.
And I want you to break this down. I want you to be completely transparent with us. You said 34 years in the industry. What would you be doing if you were not a loan officer or the owner of a mortgage company? What would you be doing? Have you ever thought about that?
Yeah. So a lot of people don't realize I've lived two very different lives. I thought I was going to be a lineman climbing poles. I was very athletic coming out of college, playing baseball, stuff like that you could make an excellent income doing that. I got a lot of respect for those guys that go out. Matter of fact, if I had a choice, I wanted to be on what we call the 100 plus ones out in the middle of the desert where you got 200, 300 foot power poles. They bring the helicopters in to lay it. It just was an exciting type of industry for a guy that's young.
Climbing poles in the desert? That sounds like a pretty risky gig. You're saying that wasn't exciting.
When you're out with the guys, working with your hands, making electricity, get into areas where it's not. I thought it was kind of cool. You're working with your hands. You're outside. I did not like being inside. That's why I was going to be a certified accountant, a CPA, and I started learning what the average CPA sits behind a desk all day and doesn't talk to anybody. But I went into real estate. People say, you sit behind a desk. I'm like, yeah, but I talk to people. I get out. I'm not just crunching numbers in a corner and turning in electronic reports. That doesn't do me good. I like interacting with people. Tim, what would I be doing? I like people. I thought about coaching baseball. I enjoy coaching. Anything related to kids, bettering kids, teaching people how to make money, teaching people how to find a side hustle so that they can learn to get ahead in life and not just work paycheck to paycheck. So many gurus want to charge you money for that stuff. I'm like, why can't we just show people? Because the odds are 5% are going to make it anyway. So why not just give everybody? Because you can't choose. I was not the person that people would have bet on was going to end up owning 2 top 10 mortgage brokerages. They never would have bet. Las Vegas had the odds against me, Tim, but they were wrong. Don't judge a book by its cover and never count anybody out.
Finish this question for me.
All right.
Or finish this statement. The kind of person who would be able to open up a top 10 broker shop, or 2 of them, would need to be
crazy. No.
What qualities? What would need to have the following, or would need to be good at?
People. It's all about people. I'm good. I've gotten the trenches as a loan officer. I've been entrenched as a processor. I've had to, take on those irate real estate agents who are upset with loan officers. And you better have the ability to jump between all those people who have different goals or sets. What is their access to the file, things like that. And you better be able to talk all those languages, let alone add in the auditors, the attorneys, the state compliance, all that stuff, the taxing authorities. To be a broker of a little 5-man shop, hey, that's where it all starts. That's the way I started. I started a 1-person shop out of my house. It took time to get to the ability to be able to feel comfortable in my skin over 600 loan officers, right? I could not have done what I'm doing the first time out, not even the second time. It took the 3rd time before I started getting into the bigger numbers. I had to understand my limitations. I couldn't do this by myself. I have partners. Partners are a huge key. And we're going to talk in a minute here, but I want to make sure I give you all the things, but understanding partners can play a huge role. So many people try and do it all by themselves, thinking they're going to hold on to all the money. But what if you can make 10 times the amount of money by taking on partners? And I think people don't really understand that.
You talk about that a lot. I mean, we've had other conversations before where it seems like you continue to bring up the importance of the team and partners. And I'm guessing at one point in your early career, you probably tried to climb that lineman pole by yourself. And eventually you just learn we can all succeed. What are you good at? What is your strength? Let's work together. Here's my strength. I mean, it seems kind of obvious, but I feel like a lot of people limit their growth when they don't understand that, and they're not willing to part ways, I guess. Because in some sense, it's a sacrifice, right? You're giving up part of the benefit to the company by sharing, but hopefully you're working with partners who understand that your sacrifice is both of our gain.
Hey, Tim, have you ever seen the movie? I think is it Captain America, where they take the little skinny, scrawny guy and they turn him into Captain America? Have you seen that Marvel?
I've probably seen it before.
Well, people might know what I'm talking about, but one of the best scenes in that movie, they take this guy who's too small, too skinny. He doesn't meet the criteria even for the standard enlisted person, but somehow he sneaks his way in and he's at boot camp, and they're trying to find the top guy to put into this Captain America role. because the U.S. Army or whatever has this plan to do something with the top guy. Well, there's one scene where they're all running up and they stop them. And they say, hey, whoever can get to the top of that flagpole and get that flag will get a ride back. The rest of y'all have to run the 10 miles. And so they start hitting each other, beating each other, trying to get up this flagpole, because that's the only way that 99% of them know how to do it. They stop, they look stupid, no one's getting anywhere. And the one skinny guy walks over and he grabs at the bottom of the flagpole where there's a pin, pulls the pin, the flagpole goes over, he gathers the flag, goes and walks over and gets in the Jeep and gets a ride home. So many of us take the way of the 99% because people before us, we just keep beating our heads on the door. I've always been blessed with the ability to find those other ways. And I think that was loan processing, loan underwriting. It's like, here's what you're trying to accomplish. How many other ways can I accomplish to get that condition done? Even today, underwriters, your younger underwriters, I need this and only this will satisfy. It's like, actually not. I can give you this, or this, and it will be the same exact result to solve that one condition. A lot of things have been lost with automated underwriting. You see what's in black and white and you assume that is the only way to solve that condition. You're people that have been in the industry longer, like, I see a condition, I go, cool. I see what the condition is, therefore, I know there's 12 different ways to solve it. Let me go with my client and find out which one of those 12 ways is the easiest, and I'll get back to you, underwriter. Stuff like that.
Yeah, that feels a little bit like creativity. How creative can you be in solving problems? And the more creative you are, the more opportunities possibly that you're going to have. We talked about the CEO part of it, or the president part of this, I should say, or the ownership of a mortgage broker company. But if you were a loan officer on the front lines right now, what would you be doing right now, specifically given the fact that the refi revolution hasn't happened yet? And I fall to that as well. I was really banking on the refi revolution. I was really banking on being able to help some people with the refinance revolution, but it's not there yet. You're going to have to do something else. What would you be doing right now as a loan officer? What advice would you give to a loan officer right now?
Learn how to do credit repair. I can take people that are just outside the qualifying and they think, oh my God, I've got a 580 credit score. I've got to get to 800 in order to ever be a homeowner. I'm like, no, you don't. I got to get you to what, 620, 640, depending on what lender I go to. And I can get you an FHA. I can get you to Cal HFA. I can get you a down payment. Knowing what your minimums are to accomplish what most people need as a first-time home buyer, and then work backwards to that. Sometimes you only have to bring people up 20 or 40 points to get them where they got to go. And they in their mind think they have to come up 200 points and they give up. And you're like, I can get you a loan if I just get you 40 points. And we have the capability electronically to go see give us a roadmap of what that would take. And people say, well, Rich, that's expensive. Because let me tell you this, I pay for those roadmaps. If people will come to me, I sit down with them, I get the credit, figure out how many points we got to go. I pay for the roadmap at Advantage Credit that tells me what we need to do. And then I give them a plan. And sometimes it could take 6 months, 8 months, a year. But you build your customers and you stay in front of them. You keep them pumped up. You keep them going and organized. You're the first person to ever try and help them. There's a big difference. You can build a pipeline of loyalty. Sometimes they leave you, but for the most part, they stay.
Yeah, I think the fear there with a lot of loan officers is that's going to be a lot of work and you're not going to get a lot of money right away. And it's a sacrifice.
I'm sorry. I don't know what to tell you on that one.
But as the loan officer, you're committing to a more, let's just call it what it is, a difficult situation. It's more work.
But I'm saying I can build up a pipeline on that till the easy loans come. There's always business.
Right.
The question is, everybody wants the A borrower loan that just falls in your lap and you can do in 12 days. I can't pay my bills. Well, I'll tell you what, you start today and in 90 days, some of those hard ones will start to come through. You just got to build the pipeline and then they start to feed on themselves. And guess what? Every one of those people knows somebody who knows somebody who knows somebody.
That's right. And if you're not doing anything else, if you're waiting on those A paper guys who are sitting on the sidelines, you might as well be doing something. Well, we used to call that the incubator. You got a client and first diagnose what's their hang up. Is it their job? Is it their income? Or is it their credit? If it's the credit, let's incubate it. Let's run that analyzer, put together a plan. Put them in the incubator because they're going to grow. And when the time is right, and that credit's right, boom, like you said, they're just going to trickle right out. I think that's a great strategy in this market, right? That's a fantastic strategy. And I think it cannot be overlooked Because like you said, for every one of those 580 FICO borrowers or 600 who are close,
Tim, hell, I think we got people that go down to 580 right now. So
we do.
Understanding how low can you get someone an FHA loan?
Yeah.
Know your lenders.
Yep.
And sure as hell, don't think just because you're doing business with UWM that's the only lender that does FHA. Maybe they do stop at the 620 or whatever.
What do you think about marketing wise? Like, what do you think about right now? What should your message to your realtor partners be right now? Is there any overlying message that we should be sending out right now? It's easy to fall into doom and gloom, right? Like what we talked about with the market. Like, I don't know that it's a great idea to just call everybody and complain about rates. I think that's probably not the right approach. I think you need to deliver that in a way that's optimistic and opportunistic. So what messages should we be doing right now, or could we be doing right now that are actually good for us in this present market?
Sure. We just did a realtor presentation out of our corporate office last week. And then I want to give credit to Yale Fowler for this one, good friend of mine. And he started changing it around. Yale has a lot of rental properties himself as a loan officer. He's not a real estate agent. But he stopped going after, hey, realtors, let's get together and let's talk about first-time home buyers. He switched it up and said, hey, realtors, let's get together and let me tell you how to become, buy your first rental property as a real estate agent. Number one, you're in the industry all the time helping other people build portfolios. Are you building your own portfolio? Number two, do you understand what a DSCR loan is, how easy it is to get a loan? Number three, most realtors have areas that they know like the back of their hand. And if they saw the right property, they'd go, I know that I can get $2,200 a month for rent. They know their areas. You're the best ones, and you're looking for everybody else. But I'm like, you can represent yourself. You could get the commission. You could be, are you building your own portfolio? And how easy is it to do that? What are you looking for? And he walks them through that. Once I started building houses from the ground up, buying land, build a house, do construction. Once I started buying rental properties, once I started flipping properties, once I started investing in flips, I found that my conversations grew because people say, oh, ask Rich. He's done that before. You know what? I know someone who's done that. Ask Rich. And my realtors started calling me and saying, hey, I know you've done this. Let everybody know. Chris Cook, he's one of our loan officers. He's done a bunch of flips. And he puts it out there on Facebook. If you got any questions how to do this, let me know. I'll be happy to walk you through. Do you think he doesn't get business off that? Like, what is your book of tool or your tool chest? If you just have one tool which says, I can only help A-plus borrowers do refinances, you're leaving a lot of tools. Loans are tools. DSCR is a tool. Fannie, Freddie, 5% down, USDA. Can you flip in your head on the spot and know the difference of those programs in conversations? Here's one of the best ones. This is 100% a right answer. I can't tell you how many times borrowers have filled out applications and we go, oh, man, I wish I had a down payment. I wish I could qualify. My debt ratio is too high. And I'll look at these and I'll say, hey, have you asked them if they ever been in the military before? I noticed they didn't fill that out. You have been in the military? Hey, have you ever used a VA loan? We allow borrowers to fill out applications and we don't necessarily ask them, we don't go over it anymore. Everything's just so fast and electronic. Every single borrower you talk to, even women, don't assume anything. Have you ever served in the military? I have people say, yeah, but I was only in for 2 years and I got hurt. Really? You got hurt? Wait a minute. Oh my God, you got the golden ticket. 0 down, 0 funding fee. There's many loans when we do audits and we have to help fix it with the lender that we ask that question because one of the easiest ways to fix a loan is with a VA loan that you could go 0 down and the rates are always fantastic. They have been the last couple of years, but understanding the holes that people leave on a daily basis because the borrower, my brother's a great example. He's like, yeah, I didn't know I could use it. I was only in for 4 years. I didn't retire from the Air Force. And I'm like, what does that have to do with it? Like, that's the mentality. So they just don't market. Yeah, I've had people market and say no because they just assume, I wasn't in long enough. I'll just say no. That's
Matt Ishbia talks about this a lot, and I don't know exactly how he words it, but he words something similar to become the expert. Knowledge is opportunity. Knowledge is conversation, is opportunity. And if you think about it, if you're so focused, and I'm guilty of this as well, if you're so focused on looking up, it's approved the main way, real simple, FICO's good, assets good, credit's good. If something falls outside of that, if you're not prepared, you're going to set that file aside and say, oh, that one doesn't qualify. What you're saying is become knowledgeable at the fringe, become knowledgeable with those FICO scores, become knowledgeable with those down payment assistance. And by the way, I love what you said about conversation. I love what you said about working with those realtor partners. And I think there's something bigger there. I think the minute you help a real estate agent who's independent contractor, most likely, the minute you help them with an investment property, I mean, that's a 10x situation. You're not helping a borrower. You're helping a person who helps borrowers. So if that real estate agent has a lot of business, and a lot of them do, and you can teach them how to do something like this, you don't think they're going to talk to every one of their clients about this? I mean, I think that's a no-brainer strategy.
I have people that, Rich, I don't want to buy rental properties. I don't want to help people with credit. And I'm like, then what are you doing in the industry? Because the industry changes daily, monthly, yearly, guidelines, everything. And you can't predict what next year is going to be. We can't. I don't know what 2025 is going to be. It could be just as crazy.
Yeah, you just brought up the perfect question, man. We're moving into our final topic here. Yeah. Year in review.
Yeah.
Rich, let's talk about the year in review. Do you remember January? Do you remember where you were with the numbers? Do you remember where we were with our sentiment, with our mindset? Let's talk about the year in review, man. What are your thoughts on 2024?
Well, here, it's funny you say that because we were just looking at this today, and I'm going to give you some very interesting numbers here. I noticed some of the other brokerages do this. I'm like, well, hell, why don't I throw our numbers out there? Because in a market where people have complained and said, oh my God, there's no business, there's no nothing. I'm like, well, what changes did I make? I left California and I opened up in 44 states back in 2022 because I felt like coming off of the C word 20 and 21 that we were going to have a pullback. They said, we're going to raise the rates. We knew they had to slow down. Money was cheap and it was fast and furious. Changes had to be made. We made changes. All right. So this is what I'm talking about. I track every day, every month since the first day we opened up our company. I want to see trends. I want to see where the business is going, the whole 9 yards. So this is a great example right here. So year-to-date correspondent, we've funded 3,124 for $1.5 billion. Broker-wise, we've added another $1.2 billion for another 2,400 loans. Put those two together, what do you have? Almost 6,000 loans for the year. Go back a little bit and go 1 year ago. 1 year ago in December, we funded a whopping 245 loans. December of this year, we're on track to fund 627 loans. Well, December, year over year, we're still growing in a market that no one said you could grow in. That the people are saying, oh my God, the sky's falling, the sky's falling. The sky is always falling. And if you allow it to, it might just fall on you. I don't let anything stop me when I wake up in the morning. I'm going to succeed. I'm going to win. I'm going to make it because I've been through every single market that they can throw at us. Do you think this is the first time we've had a rate cut and a rate increase and we've had inflation? Hell, go back to, 2008 crisis. Let's go back. I got in the industry in 1991. So we just came out of a crisis back then. Rates were just coming down, just came down to 8.25%, down to 8.25% because they had gone up a little bit. People have short memories, Tim, and I'm aging myself, and that's probably why I had a lot more hair back then.
Mm-hmm.
We have everything at our fingertips, but the one thing that I cannot overcome is excuses. I don't get to make them. I got to get up every morning. I got to come to work, and I have to be accountable. I have 600 loan officers trusting me that I'm going to do the best I can to get up every morning and not be a lazy broker. We have ownership that wakes up every morning and we work along the side of our loan officers, trying to come up with ideas, trying to find, what did we talk about, Tim? That one loan per month that maybe you weren't getting before. What did we talk about with mortgage ballers? I had recruited somebody this week and they said, I'm coming aboard because I watch your mortgage baller videos.
Wow, that's awesome.
Lisa Budd was interviewing him and shared that with I was kind of laughing. I'm like, cool. A stranger out of Hawaii is watching our mortgage ballers videos and said, I want to be part of that company. And I thought, wow, somebody's being reached. What did we put? We interviewed 27 of the top people.
Mm-hmm.
And people still call up and say, hey, Rich, what would you do in this market? First thing I'd do is I'd watch all 27 videos. They're free. And then ask me the question, what would I do? Because they all do it different. Which one do you relate to the most? And every one of those 27 said, I'm okay if someone calls me and wants to talk about it. Evan Kaufman, Chris Granger, and Matt Collette talked about partnerships together combined for accountability, instead of trying to do it by yourself. Why are you trying to do this by yourself? Who's your accountability partner that helps you get out of bed in the morning and says, if I don't get out of bed, Tim's calling me. Tim, you become one of those people for me. We do these videos. Some days I don't want to do videos. Hell, I probably got food on my face. I'm getting gray. I have 100 reasons. I'm fat. I'm overweight. I'm losing my hair. But we said we're not going to stop getting the word out there, and we're going to have real conversations that people can relate to. Yeah, and we're not going to manipulate the information.
And I talk to people probably twice a week, and they say, hey, I want to make videos like you guys are doing. And I tell them, I say, well, in my opinion, the best thing you can do is don't watch your own video. Record it, go unfiltered with it. Well, obviously don't say anything stupid, but do your best, get out there, put it out there, and don't watch it, because what's going to happen if you watch it is you're going to analyze yourself. You're going to look at yourself. You're going to not like yourself. Video's not going to get launched. So do the video, get it out there, be honest, be ethical, be transparent, be valuable,
be likable,
and then just be yourself, and then do the next one, and then do the next one. And then maybe in a year, go back and look at how you're doing. For me,
Tim,
that
how
works.
Many total videos, not just Mortgage Ballers, but all videos do you think we've done in the 2024? And
that's it.
Started at 0.
Yep.
How many total channels and videos have we attempted?
Hey, I think I have that number for you right here. Hold on a second here.
I'm thinking close to 500. Maybe it's 400.
I'm going to tell you it's closer to 679.
See, 1 year, and we said, what do you think about making videos? And you said, hey, let's do it. 79 videos later, are we any better? Is our software any better? How we do it? Is your background better?
Here's the thing is like,
crazy.
This is the point where you have to say, well, that's really cool. Like, hey, good job, pat on the back. We did 679, but that's done already. Like it's already done. And and if you want to, we have to triple down. We have to double down on that and just keep going. And then when we get to that next point, we got to look back and go, wow, we did 5,000 videos this year. Great. Good job. High five. Next 5,000. And then one day, I think you get to the point where like, wow, I didn't even realize we were running this fast, or that we were going to make it this far. I think that's probably what happened with Expert is you lowered your shoulder and just kept going. And I don't care. We're at 100. Okay, great. We're at 200. Sweet. Let's go. It's fun. Let's keep going. It's getting hard. Let's keep going.
Well,
I feel like that's the secret. Yeah. That's the big message here, I think, that we need to take, and I need to remind myself of.
Somebody asked me the other day, said, how do you grow? How do you recruit so easily? I said, because I believe in the product. I mean, we built the platform at Expert Home Lending by originators for originators, and we cut out all the red tape so this is the ultimate platform that I would want to work for, right? And we took it to the streets and said, maybe you might agree with it too. We don't even really recruit people anymore, quite honestly. They come because they hear us on forums. Someone showed me something the other day. Someone's having a full-blown conversation on Reddit, and Expert Home Lending got thrown in there. The other day, Edge Mortgage is putting out that they were #1 broker for the year, but they showed the top 10, and there was Expert Home Lending with one of the fastest year-over-year growth of any of them, percentage-wise.
Can I say something here?
That's free advertising.
Can I tell you something here as somebody who, obviously I work for Expert Home Lending, but you know what's interesting is if you Google this platform and like platforms like this, you won't really typically find Expert Home Lending. It's under the radar. It's very, but I think that's a good thing. I mean, there's nothing flashy and like no bells and whistles. I mean, obviously you can talk about Nexa and then some of these Edge.
Yeah,
there's always a list
for those guys.
Yeah, 100%. All success stories in there, but you won't find Expert Home Lending, and typically you won't. And I think that's actually probably why one of the reasons why I think it's easy to send people here, because it's kind of a little secret. It's like, oh, cool. What do they have? And then you kind of learn about the platform, and you learn about what's offered, and you're like, really? Wow. And that's kind of what I want. And it doesn't sound too good to be true. The president isn't on a stage with, a cool hat, like fist bumping the crowd and like doing like a Tony Robbins thing, which would be cool if you ever wanted to do that, by the way. We can set that up. But it's the fact that it's kind of, I think that's kind of a good way to go. I don't know if that's intentional or if that's just where we are, where Expert is in
Tim, the whole idea behind Expert has never been for me to be the one getting all the recognition. When they ask me to do interviews, I'm like, why don't you interview one of my top loan officers? They're the ones that are doing it. We provide a platform. It's a partnership. Wouldn't you want to hear from them versus me telling you how I did it? what did I do? I created a platform. I like people. And somehow, some way over the years, it's turned into a built-in trust. I'm very thankful for that. If I could lead the industry tomorrow with my integrity, then I've accomplished something. And I think that genuinely is what people want, especially the average age of a loan officer. They're not young. They're tired of the games. Just give me a platform I can trust and know that everybody's working towards the same goal. Tyler Lux with Legacy Lending. I mean, we talk about that stuff of what's important. And these guys have been in the industry a long time. You've been in the industry a long time. Dave Bleesmer's been in the industry. You're not out for the games and the shiny apple, because a lot of times those shiny apples turn out to have a lot of baggage attached to them. And if it sounds too good to be true, it probably is. I will tell you this. I think the industry is changing right before our eyes, daily almost.
Yeah, let's talk about that. What can we expect next year? Like what do you see happening in the industry as a whole? And then let's talk about what Expert has planned, if anything, that we need to know about it that's exciting.
Sure. I can tell you that regulators at the state level are now going back into social media and places and looking at people's posts and advertisements. People think, oh, you can do anything you want. I don't have to put an APR on there. No one ever said anything. You should have known to do that, right? Yeah. Who's your compliance person that's allowing you to do that? Guess what? You've left, Hansel and Gretel, the little trail of crumbs, for the last 3 years, and they just wait, right? They wait until they have the time, energy of their own platforms financially to go after people and do stuff. Now, we got a lot of that's going to change. The broker world with what's out there is still absorbing larger and larger amounts of the total business, but we're still, 28%, 29% of the total business. So direct lenders are still killing us. A lot of room to go there, but I'm not going to say I think. It doesn't matter what I think. It doesn't matter what anybody thinks. You are a loan originator. You are a real estate agent. You either believe that that's what you are designed to do and you get up every morning and you go do it. If you're not getting enough business, my question is, are you cornering yourself into one or two products, or are you expanding your knowledge base and trying to, like I said, credit repair? You don't have to do a lot of credit repair. Maybe I do that for 1 year and then the market comes back. When the refis are flying, Tim, I'm not doing credit repair.
So real quick, can we go back real quick? Do you think compliance is picking up for us as brokers because we're becoming a larger part of the market share? Do you think that loan officers today in the broker world need to be ready? Second question, what do you think happens when the regulators pull one of your ads from 2022 and there's no APR on one of your numbers? What do you think happens?
Well, it's not what people think. You have so many people that are afraid of their own shadows. And I'm not perfect as a broker, and I've been written up for things, but most states want to work with you because the thing they don't want and they're not going to tolerate is you defrauding the communities, the consumer. They're not going to tolerate that for a minute. Putting the wrong trigger words, the lowest rates, were they the lowest rates that day? I forgot to put an APR. Yeah, they're going to correct you. It's the second time they come through and you're still doing it. They're going to we draw a line in the sand and they say from this day forward, we've had the conversation. The next time we're going to have a problem. There's people that still push it. There's a lot of people that do stuff and say, I'll wait till they stop me. I know that from our standpoint, Expert Home Lending, I know we're talking about Expert Home Lending on the show, but that's my only knowledge to be able to use. But I try and pay attention to my other brokers, meaning, the top people. If I catch wind that something's going down with them, I'm going to try and find out what's going on. My goal is to be compliant. And if I find out I'm not, then I'm going to make a correction. I'm not going to wait to be scolded. I'd rather a regulator come and go, whoa, you were paying that guy wrong. But I see you stopped and you started doing it different from here.
Right.
When they have to be the one to stop you, when the CFPB has to come in and be the one to stop you, when that's what you don't want. Now, if it's pure ignorance on your part and you didn't understand, that's one thing. But when it's obvious what you're doing.
You mentioned Expert Home Lending is most of your experience in the broker side, plus Expert Home Lending, plus your prior companies. I've worked for retail. I've worked for several retail. I've worked FDIC Bank. I've worked broker. And I will tell you this, if you talk to the head compliance person at each one of those companies, you would be hard pressed to get them to agree on what the definition of compliance is for any given ad.
Yeah.
Now, there's a general rule, with what's required. We're talking about marketing here, not the loan process, but there's a general rule of like 4 or 5 things. But some of those people at these big multi-billion-dollar companies will tell you, you don't need that. You go to the next retail company, they'll say, you absolutely need that. Which one is it? How do you know which one it is? And then the truth of the matter is we're rolling the dice regardless. You could get audited no matter what. Like you said, it doesn't matter what you think. My suggestion would be err on this conservative side. Maybe put it all on there. Maybe throw an
I can tell you
APR
that
on
all
there.
states are different.
Absolutely. So you got all states are different and all companies are different. That tells me it's a subjective thing. It's a court of law. What is your lawyer comfortable with? I think that's probably the best question. What is your company's attorney, legal counsel most comfortable with for you to use in this ad? So it's not black or white. It's not 100% objective. And I just want everybody out there to know, if you're doing marketing, because I do a ton of marketing and I do some for other people, no matter how hard you try, you're still kind of an open book and they can still come at you and question you as long as you are doing your best and you have a reason. And like Rich said, as long as you learn from that first warning, there you go. I mean, that's all you can do, but you're never going to be completely free of a potential marketing audit.
Right. I'll tell you, if you're getting perfect audits, then you're probably a very small company and not doing much business. Because when you add 600 loan officers and 6,000 loans, they're not all going to be perfect. They're going to find something. They always find something, but it's never a defrauding of the customer. Most things are done electronic. Most states now don't even want any of your investment properties, DSCR, because those are business purpose loans. We're starting to see a changeover. I only want to see your primary 1 to 4 residential unit loans. I don't need to see commercial. I don't need to see that weird stuff. So I'm glad to see a separation with that, because we do a lot of those kind of loans in the purchase world. And it's nice to be able to say, oh, great, let's move these off the list and let's concentrate on these ones.
Right.
I think the big thing, what's that?
I got a question for you.
Go for it.
Jumping topics here. Hopefully I didn't jump too soon, but 6,000 loans last year. That means how many loans did you guys do per day? Not counting, or including weekends and holidays and everything.
I mean, you can divide it by 365, I guess.
16 loans a day. 16 loan closings per day is what you average.
Per day. Fundings,
Sorry,
that's
fundings.
funded loans, but it's
16 fundings per day for an entire year, rainy days, winter days, holidays, weekends, you name it,
50
every day.
applications a day coming in, on the opposite side of that. We specialize in purchase. We'll do refis. Of course, anybody would.
Mm-hmm.
But purchases are always available no matter what the market is, because there's always going to be someone who has the ability. I don't care how high the rates are. There are pockets in the United States that pay enough rent on a DSCR loan to put 30% down and have break even or profit. It's up to you to figure out what those are, right? And work with a great real estate agent that can help you. You have to learn. So many people have these blinders on, Tim, say, I live in Colorado Springs. And it's like, great. What's the next county over? What's the next city over? What's going on in Boulder? In the same states, I have areas that are struggling and areas where people are setting records, and they're both in the state of California. How is that possible? Right? So a lot of people are so caught up geographically that they can only do stuff within an arm's distance of themselves. And I'm like, you gotta expand yourself. If you're truly looking to make a living, a good living, which I still think is one of the best ways to make money in the world, real estate as well. Do we go through highs and lows? What you do with your money is important. You can't spend like you're a drunken sailor on the weekend, right?
That's right.
You gotta have responsibility. And you'll be surprised that these downturns can be a little bit easier on you economically. But should you find yourself on the other side, you're going to have to work somewhere. You're going to go to Walmart. Where are you going to go and give them 100% because they want 100% of your time in exchange for that hourly wage? I'd rather give 100% to myself. That's where I'm at in my life. I will get up in the morning and I will knock on doors. I'll do what I need to do. I'll shake a sign on the damn corner and I will get somebody's attention to get that one loan per month to survive until the market changes. I will not curl up in a corner and say, woe is me. Those days are long. I've been there. They get you nowhere.
Rich,
That'll support my day, man. Get up and
Rich,
go.
Absolutely. Well, Rich, I want to thank you for your time today. We're just about out of time. We hit the hour mark, actually. Unfiltered. Woo. Thank you for sharing your time today, Rich. Any closing words or thoughts for this week?
You know what, Tim, I think the biggest thing is change is always happening. It's been going on the last couple of years. Don't take it so personal. Yesterday's gone. Tomorrow's not here. What can you do today? And then just be satisfied at the end of the day to then start a new day. Stop looking backwards. Stop getting so far ahead of yourselves. And I think one of the biggest things we all could learn going into the new year, how are you supposed to help people with the biggest financial decision in your life if your finances are blown up and crazy? If you would start even with yourself and being good at budgeting, things like that, learning to have those kind of conversations, anything that makes you sound like an expert because you've taken enough time to make it important. I talk to people about a lot of different things. I've filed bankruptcy in my life. So guess what? I have conversations about bankruptcy. How does that affect you? What's it going to look like? What's divorce look like? You know, kids going to college, what does it look like? Well, because I've gone through all that stuff, man. You are a wealth of knowledge and you don't even know it. Somebody out there will relate to you. You just got to get out of your own way and stop hiding, but get in the open area. I'm sorry, but social media is too important nowadays, Tim. It's where people are at, so that's where you have to be. Bottom line.
Unfiltered, Rich Hanlin, Tim Rhey. We'll see you next week.